to Wonderslate. Subscribe to our YouTube channel for more updates. Topic for today's quiz is the tertiary sector in Indian economy. Question number 1. Which one of the following is not an instrument of selective credit control in India? Option A. Regulation of consumer credit. Option B. Rationing of credit. Option C. Margin requirements. Option D. Variable cash reserve ratios. The correct answer is Option D. Variable cash reserve ratios. Variable cash reserve ratios are aimed to control only the volume of credit. Quantitative method, not both volume and purpose of credit for which bank files loans. Qualitative method and selective control method are used for these purposes. It has a number of limitations. Question number 2. Bank rate implies the rate of interest. Option A. Paid by the Reserve Bank of India on the deposits of commercial banks. Option B. Charged by banks on loans and advances. Option C. Payable on bonds. Option D. At which the Reserve Bank of India discounts the bills of exchange. The correct answer is Option D. At which the Reserve Bank of India discounts the bills of exchange. Bank rate is that rate of interest at which the central bank of a country provides refinancing facilities to commercial banks. The bank rate, a benchmark rate at which RBI buys or rediscounts bills of exchange or other commercial papers eligible for purchase. Every bank needs refinancing as it is very difficult to match borrowings and the flow of deposits. Question number 3. Hawala transactions relate to payments. Option A. Received in rupees against overseas currencies and vice versa without going through the official channels. Option B. Received for sale or transfer of shares without going through the established stock exchanges. Option C. Received as commission for services rendered to overseas investors or buyers or sellers in assisting them to get over the red tape and or in getting preferential treatment. Option D. Made to political parties or to individuals for meeting election expenses. The correct answer is Option A. Received in rupees against overseas currencies and vice versa without going through the official channels. Hawala is an illegal method of remittance across countries. There are money brokers who are the middlemen who undertake Hawala transfer. This method of remittance does not involve the physical movement of cash. It is also known as hundi. The word Hawala means trust. The Hawala system works as it is based on mutual trust between the Hawala agents. It works outside the banking system and legal financial systems. The remittance happens based on communication between the Hawala agents. Question number 4. The banks are required to maintain a certain ratio between their cash in hand and total assets. This is called Option A. SBR, Statutory Bank Ratio. Option B. SLR, Statutory Liquid Ratio. Option C. CBR, Central Liquid Reserve. Option D. CLR, Central Liquid Reserve. The correct answer is Option B. SLR, Statutory Liquid Ratio. SLR or the Statutory Liquidity Ratio is that portion of total deposits which a commercial bank has to maintain with itself at any given point of time in the form of liquid assets like cash in hand, current balances with other banks, and first-class securities which can be turned into cash, gold, cash or other approved securities. This ratio at present is 25%. Some assets have to be in liquid form to take care of financial emergencies that every bank has to face. It regulates the credit growth in India. Question number 5. The accounting year of the Reserve Bank of India is Option A. April to March. Option B. July to June. Option C. October to September. Option D. January to December. The correct answer is Option B. July to June. The central bank's accounting year runs from July 1st to June 30th. On the 11th of March 1940, RBI accounting year changed from January to December to July to June. Question number 6. Which one of the following is the correct sequence of decreasing order of the given currencies in terms of their value in Indian rupees? Option A. US dollar, Canadian dollar, New Zealand dollar, Hong Kong PNG dollar. Option B. US dollar, New Zealand dollar, Canadian dollar, Hong Kong dollar. Option C. US dollar, Hong Kong dollar, Canadian dollar, New Zealand dollar. Option D. Hong Kong dollar, US dollar, New Zealand dollar, Canadian dollar. The correct answer is Option A. US dollar, Canadian dollar, New Zealand dollar, Hong Kong PNG dollar. Question number 7. The farmers are provided credit from a number of sources for their short and long-term needs. The main sources of credit to the farmers include Option A. The primary agricultural cooperative societies, commercial banks, RRBs and private money lenders. Option B. The NABARD, RBI commercial banks and private money lenders. Option C. The District Central Cooperative Banks, DCCB, the lead banks, IRDP and JRY. Option D. The Large Scale Multi-Purpose Adivasis Program, DCCB, IFFCO and commercial banks. The correct answer is Option A. The primary agricultural cooperative societies, commercial banks, RRBs and private money lenders. Regional rural banks were established under RRB Act 1976. They provide credit to agriculture and other rural activities. As of March 2014, the number of RRBs has been reduced to 57. Question number 8. Since 1980, the share of the tertiary sector in the total GDP of India has Option A. Shown an increasing trend. Option B. Shown a decreasing trend. Option C. Remained constant. Option D. Been fluctuating. The correct answer is Option A. Shown an increasing trend. The share of the tertiary sector in the total GDP or gross domestic product of India is increasing, which is a sign of economic development. This reproduces the trend shown by Western countries as they were developing. Question number 9. Debenture holders of a company are its Option A. Shareholders. Option B. Creditors. Option C. Debtors. Option D. Directors. The correct answer is Option B. Creditors. A debenture is a long-term bond issued by a company in return for a loan that has a fixed rate of interest. Question number 10. In the last 1 decade, which one among the following sectors has attracted the highest foreign direct investment inflows into India? Option A. Chemicals other than fertilizers. Option B. Services sector. Option C. Food processing. Option D. Telecommunication. The correct answer is Option B. Services sector. The service sector received 21% of the total FDI flow between 2006 to 2010. Question number 11. Which one of the following Indian banks is not a nationalized bank? Option A. Corporation Bank. Option B. Dena Bank. Option C. Federal Bank. Option D. Vijaya Bank. The correct answer is Option C. Federal Bank. Federal Bank is a major Indian commercial bank in the private sector, headquartered at Kochi, Kerala. Question number 12. The National Housing Bank was set up in India as a wholly owned subsidiary of which one of the following? Option A. State Bank of India. Option B. Reserve Bank of India. Option C. ICICI Bank. Option D. Life Insurance Corporation of India. The correct answer is Option B. Reserve Bank of India. National Housing Bank has been set up under the National Housing Bank Act of 1987, which was passed on 9th of July 1988. It is wholly owned by the Reserve Bank of India and was created to encourage housing finance institutions and provide them with financial support. Question number 13. Which one of the following pairs is not correctly matched? Option A. Japan, Nikkei. Option B. Singapore, SCOMP. Option C. UK, FTSE. Option D. USA, Nasdaq. The correct answer is option B. Singapore, SCOMP. Shanghai, SCOMP. Singapore, SIMEX. Straits Time. SCOMP is a composite index of the Shanghai Stock Exchange. SIMEX and Straits Times are indicators for Singapore. Question number 14. Which of the following terms indicates a mechanism used by commercial banks for providing credit to the government? Option A. Cash credit ratio. Option B. Debt service obligation. Option C. Liquidity adjustment facility. Option D. Statutory liquidity ratio. The correct answer is option D. Statutory liquidity ratio. Question number 15. In the parlance of financial investments, the term bear denotes option A. An investor who feels that the price of a particular security is going to fall. Option B. An investor who expects the price of a particular shares to rise. Option C. A shareholder or a bondholder who has an interest in a company, financial or otherwise. Option D. Any lender, whether by making a loan or buying a bond. The correct answer is option A. An investor who feels that the price of a particular security is going to fall. Bear is a speculator who sells shares in anticipation of fall operator prices to buy them back and thus make a profit. Question number 16. In India, the interest rate on savings accounts in all the nationalized commercial banks is fixed by option A. Union Ministry of Finance. Option B. Union Finance Commission. Option C. Indian Banks Association. Option D. None of them. The correct answer is option D. None of them. It is fixed by the Reserve Bank of India. In 2011, RBI permitted commercial banks to fix the interest rate on saving accounts independently. Question number 17. With reference to the institution of Banking Ombudsman in India, which one of the statements is not correct? Option A. The Banking Ombudsman is appointed by the Reserve Bank of India. Option B. The Banking Ombudsman can consider complaints from non-resident Indians having accounts in India. Option C. The orders passed by the Banking Ombudsman are final and binding on the parties concerned. Option D. The service provided by the Banking Ombudsman is free of any fee. The correct answer is option C. The orders passed by the Banking Ombudsman are final and binding on the parties concerned. The Banking Ombudsman scheme is an expeditious and inexpensive forum for bankers' customers for the resolution of complaints relating to certain services rendered by banks. Any person aggrieved by the decision of the Banking Ombudsman can approach the appellate authority. The appellate authority is vested with the Deputy Governor of the RBI. Question number 18. The Internation Development Association, a lending agency, is administered by the option A. International Bank for Reconstruction and Development. Option B. International Fund for Agricultural Development. Option C. United Nations Development Program. Option D. United Nations Industrial Development Organization. The correct answer is option A. International Bank for Reconstruction and Development. International Development Association, IDA, is a part of the World Bank that helps the world's poorest countries. It complements the World Bank's southern lending arm, the International Bank for Reconstruction and Development, IBRD, which serves middle-income countries with capital investment and advisory services. IDA was created in 1960. Question number 19. The basic aim of the lead bank scheme is that option A. Big banks should try to open offices in each district. Option B. There should be stiff competition among the various nationalized banks. Option C. Individual banks should adopt particular districts for intensive development. Option D. All the banks should intensive efforts to mobilize deposits. The correct answer is option C. Individual banks should adopt particular districts for intensive development. The basic aim of the lead bank scheme is that banks should adopt particular districts for intensive development by offering loans and banking services. Question number 20. An increase in the bank rate generally indicates that the option A. Market rate of interest is likely to fall. Option B. Central bank is no longer making loans to commercial banks. Option C. Central bank is following an easy money policy. Option D. Central bank is following a tight money policy. The correct answer is option D. Central bank is following a tight money policy. A tight monetary policy is a course of action undertaken by a central bank to constrict spending in an economy, or to curb inflation when it is rising too fast. The increased bank rate increases the cost of borrowing and effectively reduces its attractiveness. Question number 21. Base 3 Accord, or simply Basel III, often seen in the news, seeks to option A. Develop national strategies for the conservation and sustainable use of biological diversity. Option B. Improve banking sector's ability to deal with financial and economic stress and improve risk management. Option C. Reduce the greenhouse gas emissions but places a heavier burden on developed countries. Option D. Transfer technology from developed countries to poor countries to enable them to replace the use of chlorofluorocarbons in refrigeration with harmless chemicals. The correct answer is option B. Improve banking sector's ability to deal with financial and economic stress and improve risk management. Basel III is a comprehensive set of reform measures which was developed by the Basel Committee on Banking Supervision and to strengthen the regulation, supervision, and risk management of the banking sector. These measures aim to improve the banking sector's ability to absorb shocks arising from financial and economic stress, whatever the source, improve risk management and governance, strengthen banks' transparency and disclosures. Question number 22. When the Reserve Bank of India reduces the statutory liquidity ratio by 50 basis points, which of the following is likely to happen? Option A. India's GDP growth rate increases drastically. Option B. Foreign institutional investors may bring more capital into our country. Option C. Scheduled commercial banks may cut their lending rates. Option D. It may drastically reduce the liquidity to the banking system. The correct answer is option C. Scheduled commercial banks may cut their lending rates. When the Reserve Bank of India reduces the statutory liquidity ratio by 50 basis points, the scheduled commercial banks may cut their lending rates. Question number 23. The term base erosion and profit shifting is sometimes seen in the news in the context of option A. Mining operation by multinational companies in resource-rich but backward areas. Option B. Curbing of the tax evasion by multinational companies. Option C. Exploitation of genetic resources of a country by multinational companies. Option D. Lack of consideration of environmental CSTS in the planning and implementation of developmental projects. The correct answer is option B. Curbing of the tax evasion by multinational companies. Base erosion and profit shifting is a tax avoidance strategy used by multinational companies, wherein profits are shifted from jurisdictions that have high taxes to jurisdictions that have low taxes. The BEPS project is said to be an attempt by the world's major economies to try to rewrite the rules on corporate taxation to address the widespread perception that they don't pay their fair share of taxes. BEPS aims to curb tax evasion by MNCs, hence B is the answer. Question number 24. Global Financial Stability Report is prepared by the option A. European Central Bank. Option B. International Monetary Fund. Option C. International Bank for Reconstruction and Development. Option D. Organization for Economic Cooperation and Development. The correct answer is option B. International Monetary Fund. The Global Financial Stability Report is a semi-annual report published by the International Capital Markets Division of the International Monetary Fund, IMF. The report aims to provide a regular assessment of global financial markets and to identify potential systemic weaknesses. Thank you for watching the video. If you'd like practice this quiz, then download the Wonderslate app now, link in the description below. If you have any suggestion for us, feel free to leave comments. If you liked the video and want to see more of it, hit the thumbs up and don't forget to click on subscribe button to get more updates of the future videos.